All right, in this video, we're going to be talking about candlesticks and how every single candlestick tells you a story. Every single candlestick holds information. And in my opinion, the more I study this candlesticks, it really unlocks a lot of the keys to price action. I'm not, toting it as like some holy grail. There is no holy grail. But it tells you so much. And it's just such an important concept that you need to understand. So I think how I'm going to approach this video here is I'm just going to kind of start off with the bare basics. And then as we kind of graduate later into this video, I'm going to show you how you can form a game plan with it, a strategy that you can trade with it. But just at the very beginning here, I just kind of want to start with the basics and what these candlesticks tell us, what every single candlestick on this chart represents here. So I'm just going to use this USD CAD as random here. Like, for example, we recently saw USD CAD come down here, and we can see it ran out this weekly sell side here. So as I've already taught you guys about, basic stop and signatures, we understand that a stop and signature that you want to see, of course, is price wants to be real wicky. It wants to be real wicky beneath an old high, old low. That's indicating that it's failing to displace beneath this low. You see how it opens up right here, and then you see how price comes down, and then it wicks beneath that level right there. It wicks beneath that level right there, but it fails to displace beneath it. It fails to close beneath it. Let me actually go to replay. And the thing is, it's bullish market structure, right? Now you go down to a lower time frame chart, and then and this ties into what I've talked about in my market structure series a long time ago. So now after we take care of that classic stopper and signature and we come into a brand new week here, guess what? We have this swing low put in. So here's what you need to understand. When price is in that upswing, it's so objective is to continuously run out previous day's highs, buy side liquidity until it's met with enough opposing liquidity to frame the reversal to the downside. So it's going to remain in that upswing because it is seeking what? Because you can see on that weekly chart, folks, let me refresh your memory. On that weekly chart, it's bullish market structure. You see how this is a bullish trend right here, and it's running out weekly sell side. And the next major key buy liquidity pulls are up here, these old highs. Why? Because it's a bullish trend. If it's a bullish trend, like these were the highs that were put in before it had that pullback. So now we have taken out weekly sell side within that bullish trend. And we now see this upswing has started on the daily chart. So guess what? We can come to the conclusion that probably what's going to be the case, that it's going to remain in that upswing until it takes out the previous, all this buy up above. And I know, if, just first glance, it looks like I'm just talking hindsight. All this stuff was talked about with my mentees on mic, real time, no hindsight. We've been talking about this. We've been talking about that. Like this was going to be the case. And now it's in that upswing. And as I said, it's objective to continuously run out previous day's high. Now, of course, not every single day is it going to do it all the way up to that high. That's not how it works. It ain't like, okay, we put in a swing low level off this sell side, and it's just going to remain in that upswing. And it's just every single day, it's going to be a green expansion day all the way up into that buy side, no type of pullback. No, this is where it goes into, listening to price and how it closes. So for example, we can see like we have this strong close right here. And of course, whenever we close like this, you see how it like displaces above these previous highs right here. See that short-term high right there? See that high right there? You see how it displaced above that, displaced above previous day's highs, and it closes like that. We already know right away likely what's going to be the case. It's going to, of course, reach for this buy side up above. Right? That's just basic candlestick 101 here. Many of us are kind of aware of that concept, that like when you see something like this, and it's not really showing respect for previous levels, you tend to see that continuation into the next day. And then like, for example, you can see it comes up here, it takes out that buy side, it respects that buy side above, and then it creates the internal range liquidity down below. So because it came up and it took out that buy side liquidity right there, aka previous day's highs, see how it wicked above it and it failed to displace above it, and it closes weak, and then creates internal range liquidity down below. So guess what? What's going to be next? What's going to be next is it's going to seek this inefficiency down below. It's going to seek that fair value gap that was just created here. because it couldn't do it right here. So think of it like price needs more fuel before it can make the trip up into that next level. It needs more fuel. What that fuel is going to be this inefficiency right here. It wants to rebalance some of that price action so it can, just fill up the tank, right? It needs to stop, get some gas, fill up the tank before it can make the trip to its next destination. What does it do? It comes down and it takes out previous day's lows right there, and it taps down into that imbalance right there. So that's support, and then look how it closes. What does that tell us? Because it fails to displace beneath that low, it fails to displace beneath it, close beneath it. It wicks beneath it, and that's fine. And it's respecting it, that's fine. It comes down to that imbalance, that's fine. But it's respecting it, and it closes green. So now we can, of course, assume, okay, it's going to want to ramp up again. It's going to want to take out these highs probably. And it does, and it just continues to do this. And the thing is, like, it does this, and price works like this. It's really just listening to these candlesticks until it's met with enough opposing liquidity. So like we've already concluded, this thing's overall bullish. It is taking out weekly sell side here. So it's probably going to gradually just do this type of price action and drop into the weekly buy set up above. And then you can see it displaces above the previous high. What does that mean? Bullish. See, it comes up again, ramps up, takes care of these highs. Look right here. What's the deal? What's the storyline? Because we're still in that upswing. We're still in that upswing right now. It's not showing any signs of slowing down. So guess what? Your best bet is to believe price. Listen to price. And as I said, folks, like right now, I'm just kind of giving you the bare basics because it'll make much more sense if I do it like this. When we graduate into a little bit more advanced stuff a little bit later into the video. But like everything I'm talking about here, I've already talked about in my market structure series a long time ago. Everything that I'm talking about right here in regards to the upswing and seeking the opposing buy side, I've talked about all this. I'm fully aware. But we're going to take it a step further. And I'm going to show you, like, we're going to get a little bit deeper into it because these candlesticks is just so important. But that's what you need to understand is that when it's in this upswing, it's continuously running out these highs. That's its objective, is continuously run out previous day's highs until it's met with that opposing liquidity that's enough to frame that reversal. So like right here, we get another strong close. Displaces above the highs. So it's going to reach for that high right there. That's your bias coming into the day. Boom, takes care of it just like that. That's its objective. You got to listen to price. Look, it closes strong again above that high. So now this high is going to be the objective coming to the next day. Boom, takes it. Look right there, another strong close above that high. Believe price until it tells you a different story. It's not showing any sign of weakness right now. So there's no reason to believe it, that it wants to move lower. There's no reason to believe that. It has yet again, another strong close above that. It displaces above that high. It displaces above that high. It displaces above all these highs. It does not respect it as resistance. Guess what? If it did not respect any of these levels of resistance, it did not do that, what's going to be the next level of liquidity it's going to reach for? It's telling you it did not respect these levels as resistance. That liquidity. So guess what? The next level that it's going to reach into, if it could not respect those levels, is going to be that buy side there. That's what you got up next, folks. That's literally the next level of liquidity that you got. Reaches for it. You see what I mean? And look again. And now this one, this is where you're going to be. Actually, no, I don't think it's not taking care of it yet. It looks like, I don't know, might have barely tagged it. Because then this is what I was going to say this is where you need to be more careful. Because yep, exactly, it did. Now this is where you need to be more careful. I'm not saying it still can't push up. But it goes back to what I was saying a moment ago. Price remains in that upswing until it's met with enough opposing liquidity to frame that reversal to the downside. We understand that it took its bullish market structure on the weekly, it took out weekly sell side, and that's what caused this ramp up. It's been in that swing point, just continuously running out previous day's highs, but now it's taken out the absolute high of that weekly price swing. So you're being met with a lot more liquidity now. And then you see how this candle closes. Like you can look at this thing and say, oh, but it closed above previous day's highs here. But, well, it didn't close above that though. It didn't close above the ultimate high of that price swing. That's a very important point. Pay close attention. It did not close above the absolute high of that weekly price swing. It came up, took it, respected it. So I don't give a damn if it closed above this high right here. That's not going to hold up. That's not something that I like to see. In regard to a bullish scenario, if it's respecting that could frame that reversal to the downside now. Because it came up, it took it, and it failed. It failed to displace above that big weekly level. So the reason why I talked about all this, because this thing's still overall bullish, but the reason why I did this is because we're going to talk about this on different time frames. And again, I'm going to show you how you can actually use it in an intraday environment and how you can actually form a game plan with it, make money with it. Not just this, like I'm going to be going over shifts and stuff as well. We're going to get a bit deeper into it, but I just want to start with like the bare basics here to kind of reiterate that, refresh your memory. But I want you to remember that price is fractal. What occurs on a higher time frame occurs on a lower time frame. So now in this, what we're going to do in this example, because I said I'm going to give you several different examples with several different ways of trading. Okay. What we're going to be talking about right now is continuation deals. Okay. We're using, futures for an example, but Forex is the same deal. You remember what I was saying about how when price is in an upswing, it's so objective was to continuously run out previous day's highs. When price is in a downswing, its objective is to continuously run out previous day's lows. Here's the deal. Well, when you go to a 1 hour chart, it's the same thing, but it's just, okay, its objective is to continuously run out the 1 hour candle low or the 1 hour candle high, depending on whether it's bullish or bearish, all the way until it's met with enough opposing liquidity to frame a potential reversal. So we have this NASDAQ right here from Thursday, and we have like this big displacement here. As you can see, big displacement, big shift to the downside, and price is in that downswing. So I want you to note this. See how we have, if you look at my cursor, highs high in the middle, lower high on the left, lower high on the right. You see how you have that swing high right there, and it has this big displacement right here. So as soon as you get that, you understand now it's in the downside of the curve, and it's now seeking these lows. And your best bet is to play that direction until price gives you indication that it actually wants to have a change in that direction, like it has a change in trend, right? So like we have this displacement right here, we have this strong close, and now right away, just like I was doing on the daily chart, we understand it's going to grab it to take care of this. It doesn't really give you any type of opportunity to be able to partake in that because it just immediately sells off. Like, because the key thing about this is, and I've said it so many times, is the liquidity is what gives it validity. The liquidity is what gives it validity. So if you really want the highest probability deals, you want to see liquidity left intact, of course. So like the point with this example is you could build a model around just running out 1 hour candle liquidity pools. So like we have this big strong close, we have this swing high right here, and you have the low of this 1 hour candle that you're able to target because at that point it's bearish. It's in the downside of the curve now. It has that strong close. That's clearly something that wants that low. It doesn't really provide you anything to be able to get on board for that likely, which is fine. That's going to happen plenty. You can't beat yourself up over it. Because guess what? What happens next? We get another big displacement to the downside. Now, what somebody will say in a case like this is, okay, but it looks kind of oversold to me. Don't worry about that. Play what's in front of you, not what you fucking think. Don't play what you think, play what's in front of you. Okay? It's in that downswing. Is it showing you any real indication that it wants to move higher right now? No. Then don't worry about it. You see that strong close right there beneath the previous low. It's showing you that it wants lower prices. So here's the basis behind it. It did not there's no support in here holding this thing up right now. It displays beneath that low. There's nothing in here holding this thing up. It's not respecting any level in there. As you can see, strong close. So right away coming into 12 o'clock, that's a 12 o'clock candle, we understand the low of that 11 o'clock 1 hour candle is going to get taken. Right away, we have identified our draw, our liquidity. And that's step number one, because you got to understand where your draw is. You got to understand where that thing's going to be drawn to. And we have the low of that candle right there as our draw. But here's the thing, folks. You don't want to see it like come down and then take care of it. Like say for it opens up right here and then it immediately comes down, takes care of it, and then give you a pullback and you go short. No. Remember, the liquidity is what gives it validity. You want to see that level left intact. You want to see, here's where it opens up. And then in this wick is where your opportunity is. Because remember, it goes back to the old saying, the wicks do the damage, the body tells the story. This is a clear representation of that. This is the body telling the story because it displaced beneath the previous low. It has no major support in here. So it's going to gravitate to take care of this next since there's nothing holding it up. And then we open up right here and it wicks up. And in that wick is where you look for opportunities to get short because you have the previous storyline to go off of. You understand that that is what it's going to seek here next. It's the low of that candle. So when it wicks up like that, that's where you can drop down to, say, your lower time frame chart. And then you can begin looking for opportunities. Okay, then that begs the question, okay, then but what opportunities? I've taught you this. This is where we talk about market structure, and we can buy market structure with this. Market structure liquidity is all you need, folks. Or if you're into like trend lines, you can do that too, but I'm not really a big fan of trend lines. I'm not saying you can't make money with it. I know people that do, but I'm going to talk about market structure. Okay, so you remember we have that low intact right there. That closed at 11. They had that strong close. Remember, we're in that swing. We had that swing high put in. We're in that downswing. It's subjective. Just like we were talking about with the daily chart, we have it with the 1 hour here because price is fractal. Its subjective is to continuously run out the low of these 1 hour candles. And we had that 1 hour candle, aka the 11 o'clock 1 hour candle, close strong. And that's the low right there of that candle. Okay. And then we come into 12 o'clock. Guess what? That candle closes. That's what you want to see. You want to see the candle close, and you want to see this liquidity left intact because guess what? It goes back to what I was literally just saying. The liquidity is what gives it validity. The draw, you need to identify your draw. If you can't identify the draw on liquidity, then it's going to be your stops. Okay, so we've identified that that is the level that we want to focus on here. Okay, and what happens is you can see if you're on this lower time frame 1 minute, it's starting to kind of push up gradually here. You see how it's starting to put in some higher lows here? That's the trap. That's the trap. All right. But because we have that higher time frame perspective, because we're talking about like from a scalping mindset here, like we're scalping a 1 minute chart here, and we have that 1 hour giving us that direction in this case. Okay. And we could see that 1 hour chart right there had that strong close. So because we have the understanding of the higher time frame in this case, we understand that that is probably not going to hold up because it had a strong displacement on the last 1 hour candle. It has no support that it's respecting right now. So we understand that this little push up that we see right now, this fair value, you see the fair value gap right there. You see the strong close above these highs right here. But because of that candle close, we understand that it is not going to respect this low likely. So this is a trap. All right. So you can't trust that push up. In fact, we are looking for this thing to fold because that level of liquidity is still intact. It's still in that downswing. It's still in that downswing. It's not showing you any real indication that it wants to move higher. So guess what, folks? Believe it. Play what you see, not what you think. Yes, sometimes you're going to be incorrect. Yes, sometimes you're going to get stopped out. Welcome to trading. Welcome to trading, buddy. That's part of it. Okay? But if you utilize this signature right here and you just listen to these candles, you're going to be kept in the correct direction more times than not. And guess what we call that? We call that an edge. And an edge is all you need to be successful with trading, of course, combined with the risk management and psychology. So we end up getting this thing, it's pushing up here, right? It's consistently putting in higher lows. So what do you think you're looking for at this point? You're gonna look for it to crack that low down below. Look, right here. There's a short-term low. Strong close. Right there. You see that? Right there, strong close beneath that low. That's your shift. A short-term low. It closed beneath it. You already got your fair value gap right here. Look. You got your fair value gap confirmation. You got the strong close beneath the short-term low. You could get short, target these lows down below. So you can literally just get in. If you want to wait for, if you want to wait for a premium, you can, but you'll miss a lot of plays. Or you could just get on the candle close and do it like that. So, you would have provided you about 1-to-1. If you were patient, waited on it. It'd be about 1-to-1 risk reward. You'll get better risk reward deals if that's your thing. If you want better risk reward deals, it's just this example because NASDAQ was like in a very strong trending environment. So it wasn't giving much of a pullback. But if you're waiting on like the shift and you went on candle close, 1-to-1 was there. And you guys know me, I love 1-to-1s, not to get too sidetracked from the lesson. I'm not going to ramble too much, but I'm just want to make clear there's nothing wrong with a 1-to-1. Right, I know all the little gurus, they want to act like, well, you can't make money with a 1-to-1. It's BS. I've made an absolute killing with a 1-to-1. I'm proof of it that you can do just well with a 1-to-1. All right, so, don't believe these marketers and these salesmen that have only made money from selling courses tell you that you need big risk reward. You don't. All right. You look at the top traders, low hanging objectives. That's how they typically operate. Okay. So if you want bigger risk reward though, it'll be there. You just got to be patient for it. It comes down, it cleans out those lows though. And then you just repeat that process, folks. So guess what? That was an opportunity right there that you could have ran out that low. And then what you want to do next is right here, look at this 12 o'clock candle. And now you just want to see if it can close strong again. If it can close strong again, then guess what? You're going to believe that trend. You're going to keep running out the lows within this trend. See right there? Now, I don't know if that would even give you an opportunity or not, but let's see. Let's take a peek though, just to see if it did. Because we understand that this is where we want to target. And again, you got to get over it. Like if you're the type of person that's trying to catch every single thing in the market, you're going to drive yourself insane because that's not realistic in the slightest. You're going to miss stuff. You're going to be okay with that. Sometimes it'll run into low immediately. Like there's no such thing as perfection. You just need something that works. And here's something that works. So you have that strong displacement against the previous low. That's going to be the draw. Opens up right here. Inside that wick is where you look for opportunities. The wicks do the damage. The body tells a story. The body already told us a storyline that it wants to move lower. It's in that downswing. That is the story that the body is telling us. And the wicks do the damage because the wick is where the manipulation is found. So you can see, yeah, there's really no opportunity there. Just kind of immediately sold off. I'm not saying, I mean, we all got different strategies, right? Maybe you see something in there that you could have capitalized on yourself personally. If you did, then great. But I'm just kind of speaking with how I look at things, looking for my little shifts and stuff. That's how I like to look at things. There's really nothing in there, which is fine. That's okay. You go back to the next out, and then you do the same exact thing, folks. See what I mean? There's no support in there. And then look, we got this next low right here. It opens up right here. This is what I mean. Look, actually, let's go back to the 1 hour real quick, just because I want to make sure we all get this, that we all understand this. Okay. We're still in that downswing. Do you see a swing low put in yet? Do you see a swing low put in on that chart on that downswing yet? No. Believe it. Believe price. Believe price until it tells you a different story. It's still in that downswing, and you have this low right here put in. And I get it. Like that one's a little bit wickier, and that's fine. Because it did displace beneath the previous low right here, and it didn't respect it. So it's still in that downswing. It's not showing any real indication that it wants to move higher still. So it's a little bit wickier, and that's fine. Sometimes it'll be a little bit wickier. It's actually, I mean, that's really okay, because then typically those are the ones that'll give you an opportunity to actually partake in it, because it's actually a little bit higher from the low. So you can actually get on something to take it down into that low. That's fine. Sometimes that'll happen. So remember, that candle that I was just talking about in the 1 hour, that closed at 2 o'clock. So like now we have this low. Look at my cursor. Let's put on there a little bit better right there. That was the low of that candle that we were literally just talking about. And it closed at 2 o'clock. Look where we are at 2 o'clock, folks. So again, we already have direction for this thing. We already have direction on the thing already. We already know where the draw is. We've identified the liquidity that we want to run out, which is right there. So we understand, okay, it's still in that downswing. There's no swing low or anything put in yet. It's continuously displacing beneath each of these lows. It closed strong again, and now I got this candle confirming it closed, and that liquidity is still intact right there. And guess what? I got price now pushing up. So like the thought process is behind this is, okay, this is pushing up, and that's good. That's what I want to see, because that's going to create sell side beneath this low. Because we had the folks that are getting in early on this thing that are saying, oh, look, there's our shift. There's our shift. It's going to hold up. It's going to ramp up now. It's ready. It's now in that upswing. It's not, because it had that strong close, and you had that higher time for perspective while many other people don't. So you can see like this little push up right here, and then you can understand this probably ain't going to hold up, because we had that strong close down below. So it's probably not going to hold up. So you can't really trust that little push up right there. In fact, you're going to look for it to shift to the downside. And then you're going to attack those sell stops down there, because you have that 1 hour strong candle close to go off of to tell you that it's going to take that. It gives you direction. That is your draw. You've identified your draw. And now you just need the 1 minute to confirm for you. How does that 1 minute confirm? Again, there's a million different ways to skin a cat. Some people like market structure shifts. Some people like changing the state of delivery. Some people just like going off the trend lines. Folks, there's no one way is the correct way. I know everybody wants to act like change the state of delivery. That's the best way to do it. Don't overcomplicate it. Trend lines is the best way. There is no fucking best way. It's whatever works for you. Okay. I personally like market structure shift. Changing the state of delivery, you can make money doing that too. But I like market structure shift. I've cleaned up doing market structure shift. It doesn't matter what you do. Just whatever works for you. But in conclusion, before I go on another ramble and off topic, right there, short-term low. Lowest on the middle, high on the left, high on the right. Strong close beneath that. That's what I want to see. Do I have an imbalance yet? Not yet. I need to wait for that, personally. And then right there, I got my imbalance. See? Second, so basically for myself, maybe you get an entry earlier because, you know, some people are like, oh, but it's already sold off quite a bit. That using the market structure, the way that I teach it, that's where you would get it. That's where it confirms, 100% confirmed. And there's a couple different ways you can approach this. You could risk this high right here where my cursor's pointing because that's the only imbalance. So really, like, it doesn't have much of an incentive to go past that, to have much of a deeper pullback. Because if there's no other inefficiency up there, do you see any other fair value gap within this range up here? No. Like, it's all balanced price action. So if all this stuff up here is balanced price action, there's really no reason for it to return there. I'm not saying you can't still be picky with it and wait for that scenario, but you can get away with, in a case like this, just putting your stop above the fair value gap high. Okay? So like, this is, if you look at my cursor, that's the absolute high of that fair value gap. See that? That's the high of it. So you could risk that high and then you could target this low now. There it is. There's your play. There's your sniper entry because you got the draw still intact. And now you got a change in trend right here. And it's going to gravitate to take care of that because we had that strong candle close, remember? So let's see, you could have got in like at that imbalance right there. You could have risked the high of the imbalance. Fair value gaps make for good places to keep stops. But again, this is very important. If it's the last one, if there was another imbalance up here, then you would, like, say like there was another imbalance a little bit higher up, like say up here where my cursor is, then you wouldn't want to keep your stop above this one because it has an incentive to go up there to rebalance price action. But it's already has this entire leg of price action balance, so it has no incentive to go up there. You see what I mean? But you see, even if you just got in like right at the entrance of the imbalance right there, that's just at the entrance. You got over 1-to-1 if that's, you know, what you like. Or you could wait for a deeper pullback. Guess what? If you waited for it to completely rebalance at 2-to-1, like if you went at least 2-to-1, then there you go. That's what I mean. Like, you just got to be patient. You'll get better risk reward deals. Sometimes you just got to be a little bit more patient, waiting on a pullback, a deeper pullback. But you'll get opportunities like that continuously. Or like in a case like this, it looks like it would, if you wanted to risk the absolute high just to kind of, actually, I don't think you would have. Actually, let's see. See, if you did that, you wouldn't have really even got 1-to-1 on it though. That's what I mean. Like in a case like that, you wouldn't have if you wanted to just risk the absolute high. But again, in a case like this, you can get away with risking the imbalance because there's no other imbalance in there. And it's already really good risk reward too. So, I mean, there you go, right? And then it runs out the low. Those are really good continuation deals right there, folks. Just kind of like whenever price is in a very strong trending environment, just pay attention. Like if you're a scalper and you're like scalping these 1-minute charts, these 5-minute charts, just by utilizing like the 1 hour and looking for those strong candle close, you can continuously run out these lows or run out the highs depending on whether it's bullish or bearish. You could do the same thing because remember, price is fractal. You could do the same thing with like say the 4-hour chart as well. It's the same exact process. You look for the strong close with that candle. It needs to be in that downswing, of course, so it's in that downswing. It's continuously running out the lows. It's a strong close beneath the previous low. Look for the liquidity of that low to be left intact. Look for your pullback within that range, and then look for your market structure shift after it has that pullback, and then target the lows down below. You can build an entire model around that. An entire model around that, folks. Okay, it's that simple. It really is that simple. All right, so I'm going to go over some other examples because it does go deeper than this. Like, this isn't the only thing I'm talking about here today. As I said, like, this is gonna be a long video. Like, I'm unpacking a plethora of information in this video, plethora of knowledge. And I get a lot of folks won't have the patience to sit through this video. I've already lost about 90% of the audience right now. So, I mean, if you are still here, you're ahead of most people. You actually have a decent attention span. And you need an attention span, right? You need to be able to lock in and stay focused on this stuff. So I salute you if you are still, you're still at that point, because in today's world, most people, they don't have that attention span. So now we're going to go over an example on USD JPY here. So what happened on USD JPY on this particular day, August the 2nd, 2024, we had a big move from news right here. So as I have taught you Many times the first run that you see from high impact news is a fake run. Not always, but many times it is the case. And the thing with USD JPY is it was already in a deep discount. It's been selling off for a good while here. It's in a cheap marketplace. So a common signature that I will look for after a high impact news release is, of course, a shift in market structure to the upside and then have a reversal in that trend, because I understand news is used as manipulation. But I did not trust this. On Friday, when we were looking at this, when I was talking about with my mentees, we were talking about this on mic. And on Friday, you didn't see me plug this in chat. You didn't see me plug it in the free Discord chat either. I did not plug this push up right here. And I know somebody may be wondering, wow, why didn't Mike plug this? Like, you saw this push up right here. Why did you not plug that? Because it's got the fair value gap, Mike. It's got the strong close above that high right there, Mike. It took out significant sell side, Mike. It's got that news. Like, it's got everything that you always talk about, except for one thing. Because, like, as I said, like, I've really been digging deeper into candlesticks. Candlesticks isn't, like, it's nothing new to me. Like in regards to, each candle telling a story. But I've really, went in and I've studied. The vast majority of my losses with market structure shifts are whenever I have a strong candle close, okay? It's whenever it doesn't respect its point of interest. You see, like for example here, USD JPY. We see this thing pressing up, but I want you to look at the 1 hour candle. Because guess what? That was, 9 o'clock, we see this thing coming up here. But look, you see how strongly that closed right there? You see like these old lows right here? You see how it completely annihilated those lows, folks? Look how it annihilated that. It annihilated that. There's no support in there. There's literally no support in there. So if it did not respect any of these levels in here, and I get it, it's influenced by news. But if you got this and you don't got any higher time for point of interest being respected either, and then you see something like this, it has no incentive to move higher right now. It has a little bounce, but it's just that. It's just a bounce to seek internal up above. It's going to be short-lived. There's no reason for it to hold up here. So it goes back to literally what I was just saying a second ago with the futures examples. It's in that downswing. It has a strong close. It displaces beneath these previous lows. Displaces beneath this low right here, and it does not respect it. So then the low of that candle is right there. And what happens here? What happens right here? What we were saying earlier, the wicks do the damage. The body tells the story. This thing wicks up within that range. You see that? And that's just creating sell side beneath this low. And I saw that happening. I saw that. That's why I did not trust this thing. That's why I did not trust that push up right there. I see the short-term high. I don't trust it because I understand, yeah, it came up to a premium within that little range created from the news. It's up inside this inefficiency right here, but that was a strong close on the 1 hour, and there's really nothing propping that thing up. So I understand it's gonna draw to take care of that. And then this is where it ties into what I was just talking about with futures. And there's actually opportunity in that for a short if that's your thing. I don't utilize the 1 minute and 4 because I just prefer the 5 minute. I find it just cleaner overall. But this is where you could utilize that to look for that market structure. Because the thing is, like the 5 minute, like if you wait for like another 5 minute move lower, I mean, it's already taken out the low by the time that happens, right? So then you could go down to like the 1 minute. Because if you understand that you had that strong close right there on that 1 hour, you understand when I'm telling you that it's going to come down to take care of that. And now you're coming into this inefficiency right here, which is resistance. So with that understanding, once you get a 1 minute, because this is bullish market structure on the 1 minute chart too, look, it's continuously putting in higher lows at this point. Again, it's creating that bait, that sell side down below. But we have that higher time frame perspective of the candle close to tell us that it's going to take care of that. So we're not tricked by this. But then this is where you can utilize your market structure shift to then look for the leg lower. You see? Right there. Second that candle closes right there, folks, you got to confirm play. Look, that short-term low, close beneath it right there. Fair value gap right there. That's a confirmed market structure shift at that point. And now you can look forward to come down to that low right there. It's the same exact thing that I was literally just talking about with futures. It's the same exact signature that you'll find. Look, pay attention to the candle close. If you see something like that, and it's in that downswing like this, or upswing if it's the bullish scenario, and it doesn't have anything really holding it up. Like it displaced beneath the previous low, in this case, the previous 1 hour low. It doesn't have any like major higher time frame support holding it up. Then it's probably the chances are it's going to come down, take care of that low again. And then your job is just to be patient, go down to your lower time frame, and then look for your market structure shift and then run out that low again. because price is fractal. You have the higher time frame perspective. Now you got your change in trend. It's going to gravitate to take care of that, folks. And that's where you can get in. That's where you can get short. You see? That's where you do it. What does it do next? It takes care of it as we had anticipated. See? All the way down to clean out that sell side down below. Because each candle tells a story. Listen to the story it's telling you. That's why we don't trust that push up right there. Okay? Because that 1 hour strong close, it draws to take care of it. Here's a little bit of a different example and what you can learn from it. We're talking about this USD CAD right here. So we've talked about like the third candle draw before. And of course, when price is in that upswing, right? So like on USD CAD right here, you see how like, look at my cursor. You see on Thursday how like this thing had like a really big displacement above the previous high right here where my cursor's pointing and above this buy side right here. As we literally were just talking about, like that's a bullish signature. And I get we got the imbalance right there, which, you know, helped push it down. But at the same time, we have a third candle draw in play. Whenever you have that third candle draw in play, folks, what you want to understand is it's not going to want to leave that intact very long. Of course, within the proper context. But in the context, it's going to come up and it's going to take care of that high right there. But it didn't do it immediately because it has some resistance to press it lower right now, being that imbalance. So again, now we're on a 1 hour chart, but this was that push up that I was talking about. We had this push up right here and it cleaned out that high. It had that strong close. It had that third candle draw right there, but then it found resistance. Why did it find resistance? Because it took care of Asian session highs buy side. Okay, so we had that. Their Asian session begins there and then ends at midnight. So it cleaned it out by a long shot. And then it had that reversal, but it has that reversal while still having that high intact, and you can't forget about that. That level is still there. It's still valid. Just because it's selling off right now and it didn't take care of it, you can't forget about that level. In fact, it's a good thing because it could provide you a potential reversal opportunity later. So we got that strong push, third candle draw. That level's still there intact. And what's it doing now? It's selling off here. And it's attacking the Asian session low sell side, which is significant liquidity. So here's the thing, folks. We got that level intact. Never went anywhere. So we have a clear draw up above that's residing there that it's going to revisit later. And we have that storyline because each candle tells a story. I have the third candle draw. I have the strong close, and now it's coming down here. And we're taking out this higher time frame. We're taking out this Asian session low sell side right here. That's going to frame that next leg up. So now go to a lower time frame. What do you think you look for? Well, now go to look for a shift. Bullish shift right there. See that? We took out that low. Fair value gap, strong close. But remember, you still have that level intact up there. That's the third candle draw on the 4 hour chart that I've talked about so many times. Okay? That's where we had that strong close right there above these previous highs. It did not forget about that. Price didn't forget about that, folks. And that's what I'm really trying to drive across in this example, because sometimes it's not immediate, but it's still there. Like we see this, it's still there. It had that strong close. It had that third candle draw. Price is going to want to take care of that. But the reason it sold off is because it was just met with that imbalance resistance. So it provided it that move lower, but it didn't forget about it. Just think of it like it needs more fuel before it can make the trip up to take care of that, because it completely rebalanced that price action. It respected it. But at the same time, we also got that third candle draw intact. It's overall bullish. So it wants to sell off here and it needs more fuel before it can make the trip back up into that. So it has that move lower. It takes out this sell side down below. That's Asian session low sell side. And then we get a shift, and that confirms that it now wants to move up. It wants to seek the opposing buy side because it activates that draw once you get a shift in market structure, and then it seeks it. See? That's what happens. It's like you can build models around that. Like looking for these signatures and then running out those signatures and then combine it with market structure. And that's how you go about doing it. Now I want to talk about Euro USD from Friday. I did post this in the chat, but then as I was telling my mentees on mic, I don't like it. I don't like it anymore. And I'm going to tell you what I'm talking about. So Euro USD, we go to the 4 hour chart here. This thing was coming up here. You can see it went ballistic, but it was coming up here and it took out this higher time frame buy side. I'm going to rewind a bit. All right. Let's just go right there. But you can see the higher time frame level right there. This thing was ramping up. It was moving up real nicely here in London session. So it comes up and it cleans out the level. That's a big level though. Like that's a very big level of resistance that it cleans up, That's a point of interest for us. So when I have price coming up into this point of interest, I'm hunting for a reaction off that for a potential short, and I got it. If you look right here, price has this move lower off that level. It has that fair value gap. It has that strong close beneath that low. That is a bearish, or it has all the signatures for a bearish shift that I'll look for. I get it's not the biggest displacement, but it has all the signatures that I look for. And I did plug it in chat, but then I took it back fairly quickly when on mic with my mentees, because I saw one very important detail here. Is what I've been teaching you. I want you to go to that 1 hour chart. I'm telling you, and because I've like in my back testing, I've seen this. A lot of my losses that I have had with shifts is whenever it has that candle close like this and it's not respecting its levels. So you got to kind of zoom out and you got to really pay attention to how these candles are closing. It's a common signature. And if you utilize what I'm telling you here, folks, your win rate goes through the roof. If you really comprehend what I'm telling you here. So you see how it closes above that level right there. You see how price closes above that right there. That was in the 6 o'clock that confirmed. So that candle closed at 6 o'clock. Remember, the body tells the story, the true story. So if the body tells the true story, then what does that tell us? That it's not respecting that as resistance. If it was respecting it as resistance, then guess what? We would want to see it wick. We would want to see this thing close beneath it. If that closed beneath that level right there, the body closed beneath it, then we got something good. Then we can trust that 5-minute displacement more, but we can't in this case because it closed above it right there. It closed above that level right there. And that tells us that it didn't respect it. And then look at what happens right here. Price opens up right there. Look at my cursor. It opens up right there. And what does it do? It reclaims it as support. It reclaims it as support, folks. That same area where we saw that little 5-minute displacement, we can now come to the conclusion, oh, hold up here. That's just creating buy side above the high. That is literally just creating buy side above the high because it already told us. The candles are telling us what we need to know. The candles are telling us the true story. So now the wick here is coming down, reclaiming this as support on the next candle. It's still in that upswing. There's no swing high. There's really no indication of weakness whatsoever either. And it's just coming down here and it's reclaiming that as support right there after 6 o'clock. Go back to your 5-minute chart now. This is what I'm talking about, folks. 6 o'clock, it comes down. Look how it's respecting it. That tells you everything you need to know. And you can come to that conclusion at that point that it wants to push up. And then you could, of course, depending on whatever your strategy is, you could look for a buy sit up in there and then potentially look for another leg up. These candles, they tell you so much. Because, I mean, the thing is, you understand at that point that its intention there was just to create buy sit above this high. You understand it's probably going to ramp up. Like you could just look at that chart and you could look at it retesting that and you could see these equal highs up above as well. And then you could come to the conclusion, this is about to push up again. It literally like had that little push lower. It's creating buy side above that high right there when it does that. It's creating liquidity. But then the higher time frame candle close tells us that it's going to reclaim this as support probably. And then you see it come down and reclaim that as support. And then it breaks out. And you know, and folks that are kind of into like, you know, bull flag patterns and stuff like that, there you go. And then those are the cases where you'll see it hold up. The problem with, you know, patterns like that though is traders go in and kind of trade it blindly without really having a real understanding of price. But if you combine that with like what I'm teaching you here, then that's where you'll get good follow through on those patterns too. And you see how it like breaks out of that range, out of that little trend line, and then it ends up ramping up. So you can see how you can like form models around this. Like just by having that understanding of these candle closes, it's going to put the win rate, like your win rate up dramatically. Because I've seen it with my own eyes, with my data. Like this is a common similarity that I see across the board. And just by considering that more, your returns are going to go up. Like the candle unlocks so many things. Like it just unlocks so many things. So you really need to dig into it more. You know, go into the charts, look at what I'm telling you, combine it with like when you're talking about like you're looking for your shifts and all this stuff, like utilize it. It's very important. Okay. I think that about wraps up the video. I know it was a long one, a little bit of a longer one. I salute you if you made it through all the way. As I was saying, most people don't got the attention spans for that, because most people want instant gratification. They lack patience. They just lack patience. So if you can sit through a video like that with all this information, you're like mentally you're ahead of a lot of people. All right. So if you enjoyed, leave a like, subscribe to the channel. Catch you later.